Let me start the recording. So recording has started. Let's read this question. Deresk company is a global consumer electronic manufacturer. It sells own brand smartphones. What are they selling? They're selling smartphones, computers, and personal entertainment devices. It uses target costing. What are they using? They're using target costing. Okay. Look at the product's name. Look at the nature of the products in which they are dealing. They are dealing with the smartphone, computers, personal entertainment devices. Can I say they are dealing in such products where there's a huge, really big involvement of technologies there? And we know that where there is a really big involvement of the technology, normally such products are a short life cycle product. Keep that thing in your mind. The PAD feasibility study results. The board of Deresk has conducted a feasibility study in order to decide whether or not to launch a new device. The name is D-PAD. In X9, the D-PAD will have a 3-year life cycle over which total 80 million units will be sold. In the entire life, how many units they are going to sell? They will be selling it 80 million. Okay. The variable manufacturing and selling cost of D-PAD is currently estimated 123 per unit. The variable manufacturing and selling cost of D-PAD is currently $123 per unit. The total fixed cost, including investment overheads, is budgeted to be 3,360 million over the whole life. If I ask you a fixed cost per unit, the budgeted fixed cost is 3,360. Over the entire life, the number of units they are 80 million. So logically, the fixed cost per unit is $42. Okay. The initial estimate of selling price. The initial estimate of selling price included the feasibility study for D-PAD was concluded to ensure that profit markup is 60%. How much profit markup is in their mind? That is 60%. Okay. D-PAD market research analysis. The board decided to commission some market research to determine the price customers would be willing to pay for D-PAD. Sales volume and sale prices were estimated for the various stages of D-PAD product life cycle as follows. Introduction. Sales volume is going to be 8 million. The price is going to be per unit 425. Growth. Sales volume is going to be 14 million and the price 300. Maturity 56. Look at this. The highest volume you will be selling at maturity and decline. Okay. Based on the market analysis, the board has approved the development of D-PAD as long as the total product cost, including manufacturing, investment, and overhead, does not exceed 13,000 million. Please read it again. Based on the market analysis, the board has approved the development of D-PAD as long as the total product cost, including manufacturing 1, investment 2, overheads 3, does not exceed 13,000 million. Can anyone tell me what should be the name for this 13,000 million? What should be the name for this 13,000 million? Logically, this is the estimated cost. Did you get this point? Obviously, it's an estimated, it's an estimation, yes or no? This is not the actual value, am I right? You can write in the chat box. So that is the estimated cost is 13,000 million. Obviously, over the life. Retail outlet. Retail outlet, okay. The board of Duras company is also considering opening some retail outlets, which will be located in major cities around the world. The outlets, as well as selling Duras company's products, will also hold free of charge surgeries, okay, where the product users can seek help on how to use their devices and how their devices repaired. The board has been discussing whether it is possible to use target costing in relation to the retail outlet. They want to use target costing. The following statements have been made. Director X. Target costing cannot be used because it is difficult to estimate target selling price for services. Can I say logically this Director X is wrong? There are a number of services in which we can determine the selling price. We can determine the target cost. So saying this that he could have said it is difficult, but saying this we cannot apply target costing. This is incorrect. Is this clear? Obviously, if you have carried out the thorough market research, why not? You will be able to estimate the target selling price, no issue at all. So Director X is incorrect. Director Y. Target costing is most useful when what is being developed has a high degree of variability, such as developing new services. What are you saying? Please read it. Target costing is most useful when what is being developed is a high degree of variability. It keeps changing, such as developing a new services. Listen, it is difficult to apply. It is not most suitable. When you are developing a new service and there's a continuous change, so it is difficult to apply target costing. It is not most suitable. Is this clear to everyone? Why Director Y is incorrect? Because he's saying it is most suitable. It's not most suitable. Target costing when developing a new service is difficult because services are whatever. Okay, is there any question? So normally in services, I would say I'll be with ABC costing. You are thinking for the new services, then there should be new cost drivers. Yes or no? Are you getting the point? Director Z, target costing when developing new services difficult because services are intangible. Yes, measuring unit of service is not always possible. So Z looks very logical. He's saying target costing when developing new services is difficult because services, they are intangible and measuring unit of service is not always, it is possible but not always possible. So Director Z makes sense. Is this clear to everyone? If I give you a little example relating to this, try to understand. Okay, actually we normally have one culture. If I give you that culture, let me give you the example. Yeah, you can say this is one of the limitations of target costing, but let me give you just example other than this. See, if you want an advice from a lawyer, let's say lawyer has spent only 2 minutes to give you the advice, and now he's asking, give me, let's say 50,000 PKR. Can I say I would say more than 90% people, it will be difficult to digest. Why would I pay 50,000 just for 2 minutes? Am I right? It happens. Because the majority, they will be thinking, yeah, he's just spent 2 minutes and he's asking $50,000. We actually forgetting that he has spent an entire life. After that, he has given you the advice, and that advice took 2 minutes to give it to you. But before that, he has spent his a bigger portion of life he has already spent. Just an example. Normally, people don't digest such a fee for 2 minutes. Leave that. We are with Director Z. Now, let's go ahead with what are the questions. Which of the following statement about use of target costing, okay, at Deresk is or true? It relies on JIT process in order to work. Now listen, I think we did discuss this target costing yesterday. While discussing target costing, I did not say even once that JIT is the prerequisite for target costing. I did not say. We do not have such an understanding that first you have to introduce JIT, then you will go for target costing. Actually, JIT is introduced to save cost. So there is no such thing that JIT has to be there in case of target costing. So one is incorrect. It can be used alongside life cycle costing and planning. Very much true. Even you can see in this question, they have given us the information of, I would say, life cycle costing, and they're also talking about target costing. So question 1, the answer is beta. Yes. What was the initial selling price of D-pad from the feasibility study to the nearest whole dollars? What was the initial selling price? Let's go back. Feasibility study, okay? The variable manufacturing and selling cost is going to be 123. Variable cost is 123 per unit. Fixed cost we have calculated per unit. How much? 52. If I add 123 plus 123 plus 42, I'm getting 165 is the cost. And how much markup they are expecting? 60%. So if I take 60% of this, which is 99. So can I say 165 plus 99? I'm getting 264. Yes or no? Please check. 165, then I took 60% of that. 264. Correct, okay. This is 264. Okay. Based on the market research analysis, what is the total cost gap of D-pad if Darask company wants to achieve a target profit margin? How much? 45%. They want to achieve a target profit margin 45%. If you recall even the yesterday's lecture, what do? First, we determine the selling price, then we determine how much actually profit, markup or margin we need. And third, what do? We deduct that margin from the selling price to get target cost. Am I right? First, determine the selling price. Then you determine the target profit which you want to earn. Deduct that, you will get the target cost. Now let's come to this question. We need to find out cost gap. Can I say cost gap is the difference between estimated cost, which is given to us in the question, and the target cost? Let's see. Yes. Look at this. At introduction, entity, this organization will be able to sell 8 million units. The price is going to be 425. Let me use the calculator. 8 into 425. 14 into 300. 56 into 220. Wait. Okay. Is there any? Okay, first one you're mentioning. 8 into 425. 8 into 425. I'm getting 3,400, am I right? 14 to 300, I'm getting 4,200. 56 into 220, 12,320, 240. So what is the total revenue? 12,320, 4,200 plus 3,400. It is 20,160. Can I say 45% is the margin? Then the target cost is 55%. Is this clear to everyone? If 45% is the margin which this entity company wants to earn, then 55% is the target cost. Am I right? It means if we take 55% of this, we will get target cost. Let's see. Let me repeat. If 45% is the margin, it means 55% is the target cost. I'm getting 11,088, obviously million. Now cost gap. Estimated cost, they have given us 13,000. Target is 11,088. So I'm having a cost gap of 1912. Yes or no? Please check. Right. Everyone is having the same result. That's great. What was that? 1912. 1912. Okay. The following proposal have been put in order to close cost gap of DPAD. Let's see. Let's read the proposal. Introduce 24-hour working in the factories where DPAD is made in order to increase production and build inventory. What do you think? By building inventory, by making more units, and just building inventories, can we close the cost gap? Is this the way to close the cost gap? I don't think so. This is not the way. Yes or no? Instead of making 1 unit, if you start making 2 or 3 units, it is not going to close the cost gap. Okay, what else? Incorporate quality assurance inspections into the manufacturing process to reduce what? Faulty units. That is logical. What it says, incorporate quality assurance inspection into the manufacturing process to reduce what? Faulty units. You'll be saving the cost. Increase the sales and market spend in order to boost the sales volume of DPAD. Can I say, if you are spending more on marketing, is it necessary? Is there any relationship available in the entire world? If I spend $100 on marketing, so I will definitely be getting a sale of $500 or $200. Is there any relationship? Have you ever heard? Do we have any such a relationship? That if you spend this much, then definitely you will be getting this much revenue. There's no such thing. Is this clear to everyone? It's okay, you're spending on marketing, do spend, but increasing the sales, again, there's no guarantee. Are you getting this point? Yes or no? So let's see. Okay. We have this option. Charlie. In relation to use target costing for retail outlet, which director's statement is are correct? Okay, who was correct out of 3? Who was correct when we were reading the question? We have 3 directors, X, Y, Z. Who was correct? We decided. While reading the question, we decided. Look at this. We have already decided director Z makes more sense. Is this clear? Director Z. D only. I hope this is clear to everyone. Yes or no? You can reply in the chat box. Okay. I've shared this question as well in the WhatsApp group. I really want every one of you try to attempt this question, then we'll be solving together also, inshallah. You will find this question in the WhatsApp group. So try to attempt. Let me pause it. Recording. Recording has started. Let's read the question. Brick by Brick, Triple B, is a building business that provides a range of building services to the public. Range of building services. I think we were reading previous question and where we did decide that in service industry, the more appropriate is ABC. Recently, they have been asked to quote for garage conversion, extensions to properties. EX have found that they are winning fewer GC contracts than expected. We are working for a triple B company, is a building business that provides range of building services to the public. Recently, they have been asked to quote for garage conversions, an extension to properties, that is EX, and have found that they are winning fewer GC contracts than, it means they're getting more EX than GC, okay? Triple B has a policy to price all jobs at budgeted total cost plus 50%. Cost plus 50%, can I say this is markup? Am I right? This is markup. Yes, no? Cost plus 50% is markup. Okay. Overheads are currently absorbed on labor hours basis. We did discuss yesterday that absorption costing is having, you can say, only hardly 2 activity levels. Either it's going to be absorbed labor hours, or another thing is machine hours. So right now they are using absorption costing, and in that they are using labor hours to calculate FOH rate. Triple B thinks that a switch to ABC to absorb overheads would reduce the cost associated to GC and hence make them more competitive. Are you getting why they want to move to ABC? They are actually winning less contract relating to GC as compared to EX. Now they are thinking if we move from absorption to ABC, so we might be able to reduce the cost on relating to GC, and we will be then obviously if cost will be reduced, automatically the selling price will reduce. Then when the selling price will reduce, then you will be able to sell GC at a competitive price. This is what they are thinking. They are giving us a reason why they really want to go to ABC. You are provided with the following data. Overhead categories: supervisors, planners, property related. Annual overheads, these are annual overheads. Activity drivers, total number of activities per year. Logically, can I say these are cost pools? Site visits cost pool amount is 900. So under ABC, I'm just talking about under ABC, okay? Under ABC, if I calculate cost per site visit, so what we'll be doing? 90,000 divided by 500. 180 per site visit. 70,000 divided by 250. 280 per planning document. Planning document. 2,40,000 divided by 40. I'm getting 6 per labor hours. Six per labor hours. Okay. A typical GC costs 3,500 in materials. Okay. Direct material. Takes 300 labor hours to complete. Okay. A GC requires only one site visit by a supervisor and needs only one planning document to be raised. Okay. The typical EX costs $8,000 material and takes 500 hours to complete. An EX requires 6 site visits and 5 planning documents. In all cases, labor are paid $15 per hour. Okay. Calculate the quoted price of a GC using labor hours to absorb the overheads. Look at this. We have total overheads 400,000, total labor hours 40,000. Under absorption costing, can I say it is 10 per labor hour? Under absorption costing, FOH rate is coming 10 per labor hour. Yes or no? Now they're asking calculate quoted price. How do they find out the price? Step 1 to calculate budgeted total cost plus what? 50% markup. Logically, the material in GC is $3,500 direct material. Labor cost, one GC takes 300 labor hours to be completed. And how much we are paying per hour to the labor? 15. That is 4,500. Factory overheads, 300 labor hours into 10. There is the rate. 3,000. So the total cost is 11,000. But they're saying add 50% markup. So if I take 50% of 11,000, I'm getting 5,500. It is 16,500. Is this clear to everyone? Please check. Did you people get the same result or same answer or different? Or you did not try? That's a separate story. Let's see what the students are saying. Same result. Okay. It's done. Great. Repeat which area? Person, should I repeat? See, one GC takes material cost of 3,500. One GC takes 300 labor hours to be completed. And how much we are paying to the labor? We are paying to the labor $15 per hour. It is mentioned. And in question 1, they are saying calculate quoted price of GC using labor hours to be absorbed. To absorb the overheads, labor hour. It means we need to work on absorption costing. So total labor hours, we have 40,000. Total budgeted overheads, we have 4 lakh. So 400,000 divided by 40, I'm getting FOH rate $10 per labor hour. One GC takes 300 labor hours, multiply by 10. So 3,000 is the overheads. Total cost is 11,000. 50% of 11 is 5,500. And here's your selling price, quoted price. I hope now it is clear. 2. Calculate total cost of EX using ABC to absorb the overhead. Now listen, try to understand the question. What they are asking, that is more important. You might be saying, sir, he's asking the question. Oh, I know that. But what in the question, what they are asking us to do? Calculate total cost of EX using ABC. We need to find out only total cost of EX, not the quoted price. Only cost. Okay. And by using ABC, let's see. EX takes material. EX needs material 8,000. So material cost in EX is 8,000. Labor hours are 500. And how much we are paying to the labor? 15. So labor cost. 500 into 15. 7,500. Okay. Now please try to understand. Supervisor cost per visit is 180, yes or no? Supervisor cost per visit is 180. EX requires 6 site visits. How many visits? 6. So it means we need supervisors. How many visits? 6 visits. You can say site visits cost. 6 into, what is the cost of one visit? 180. Or supervisor cost, whatever you want to write. 1080. Planner's cost 280 per planning document. 280 per planning document. How many planning documents does EX need? 5 planning document. So planner cost 5 planning document. And what is the cost per planning document? It is 280. I'm getting 1400. Labor hour rate under ABC is 6. Property related cost by using labor hours, the rate is 6 per labor hour. How many labor hours we need in EX? 500. So that is actually which cost? Property related cost. Property related 500 into 6, 3,000. Let's see what is the total cost. Material 8,000, labor is 7,500, site visit cost by the supervisor 1080, planner cost is 1,400, property related cost is 3,000. I'm getting 20,980. That is the total cost of EX. Let's see the choice. Beta. I hope this is clear to everyone. Yes, sir. Now, let's see what they are saying. First, please reply. Question 2 is clear to everyone? Yes. Okay. It's clear. Great. Look at this. This is very important. Huh? Assume that cost of GC falls by nearly 7%. And the price of EX rises by about 2% as a result of change from traditional absorption costing to ABC. First, you need to understand what they are saying. They're saying by applying ABC, GC cost will fall by 7%. Cost. But what is happening in EX? They are saying the price of EX quoted price will rise by 2%. The reason is only one. They have a policy of total cost per unit into 50% markup. Obviously, under ABC, unit is cost is going to be different what was in under absorption. So they have to increase. They are saying GC fall by nearly 7% and price of EX rises by about 2% as a result of change from traditional absorption costing to ABC. Okay. Which one of the following statement is true? Which of the following statements is true? Triple B can maintain total profits from EX at their current level by increasing the quoted price by 2% in line with what? Cost. If the cost is increasing, they're saying increase the quoted price as well. EX cost is increasing, you rise the 2% selling price as well. According to this statement, if your cost has increased by 2%, you increase the selling price by 2%. Your profit margin will remain same. Can I say they are making one mistake? Where will the law of demand will go? Students, law of demand. If you are increasing the prices, don't you think so? Demand will fall. Yes or no? Demand will decrease. So they are forgetting one factor, their demand will fall. So this is not possible. It is not so easy. If your cost increases by 2%, you increase the selling price by 2%, you will be getting the same margin. No, you will end up by even getting what you were getting earlier. Yes. Okay. Triple B can improve overhead cost on the EX by reducing what? Labor hours. They are facing the problem. The problem is due to ABC, what has happened? Basically, EX cost has increased. Now they're thinking to reduce the cost. For reducing the cost, they're thinking Triple B can improve overhead cost on EX by reducing labor hours. Now listen, can I say labor hours? They are not the only labor hours is not the only reason due to which cost is incurred on EX. What about other factors? Is this clear? So there are other cost drivers as well. It's not only the over labor hours. There are other factors also. So they are also incorrect. The new overhead allocation is fairer representation of EX and GC, use of resources driving what? Overheads. Very logical. I think we did develop the understanding. We did develop the understanding that under ABC, you will be having a true allocation of overheads. Okay. Maintaining existing markups should make both EX and GC more competitive. No. Listen. Your EX will become less competitive. It will become less competitive. Why? Because under ABC, EX cost has increased. If you want to keep the same markup, then your quoted price, selling price will increase. So can I say GC will be more competitive? Why GC will be more competitive? Because GC cost has reduced, but EX will be less competitive. Yes or no? Is this clear to everyone? GC will become more competitive, but EX will become less competitive. So you can say GC will become more competitive, but EX will become less competitive. Is this clear now? No less. Come here. Basically, please listen. It depends on the product. It depends on the product. You cannot directly go for life cycle costing. What did you write? Life cycle, what is it? You cannot directly go for the life cycle. If I give you the example of, there are a number of examples of products, they don't have a short life cycle. What about car? CAR, car. Models, they will keep changing, but logically, cars are here for a very long period of time. And especially in our country, I think one model will last. There are, I think we have seen Toyota, Suzuki, and so many others in Pakistan. One model they use for maybe 30 years, 25 years. Yes or no? So on each new product, you cannot directly go for life cycle costing. Normally, on which products you will be going for life cycle costing? I think we did develop the understanding. Where heavy, what is heavy in heavy? What thing is heavily involved? Then you will be thinking for the life cycle costing. Technology. Yes, here you got the answer. So if you are dealing with a product which has a huge involvement of the technology, then you should be thinking for the new product that go towards life cycle costing. Okay, one triple B manager has suggested that only marginal costing should be included in budgeted cost calculation, as this would avoid the need for arbitrary overheads allocation to products. Under marginal costing, of course, there is no overhead allocation. Okay, let's see what they're saying. Which of the following statement is are true? To switch to marginal costing would avoid the problem of uncertainty of budgeted volume. Budgeted volume is needed in order to calculate fixed overhead absorption rate. Can I say very much true? So under marginal costing, we are not worried about any volume. Yes or no? We need budgeted volume in absorption costing. We don't need this budgeted volume, because in marginal costing, what do? In marginal costing, actually fixed cost, we treat it like a period cost. Yes or no? Under marginal costing, we treat fixed cost like a period cost. If triple B uses marginal costing, there is a risk that manager will not generate sufficient contribution to cover fixed costs. This risk will remain there, because you are treating fixed cost like a period cost. So both the statement are true. Okay, let's see. Which three of the following statement about ABC and traditional costing system absorption and marginal are correct? No over absorption, under absorption overhead can occur under ABC. It can occur. It can occur. If you people just remember yesterday's lecture, we did discuss total overheads, they remain same. Either you are going for absorption or you're going for ABC. So the problem of under and over absorb will remain there. Yes. ABC is useful businesses like triple B, which have a high overhead in their cost structure. Yes. ABC is logically more suitable only to those businesses where we are having a high overhead cost. ABC is not suitable. ABC is not suitable for use in business like triple B that provides service. No, 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 no. They're saying incorrect. I think we did discuss yesterday. ABC is more suitable to service industry. Yes or no? They are providing services. Marginal costing understates the true cost of product when compared to ABC. Very much logical. Under marginal costing, ABC is better than absorption costing in understanding what causes overheads cost to be incurred. Yes or no? Because ABC is the one which has actually introduced the concept of cost driver, that we need to find out the reason why the cost or overhead has been incurred. Both ABC and marginal costing treat fixed costs. No. Can the marginal costing treats fixed cost like a period cost? Let me save this page and share another page. Stop, pause. Okay, recording has started. Let's quickly discuss the concept of throughput accounting. Just a very small concept and very important also. Actually, throughput accounting gives us a concept that in a very short period of time, there's only one variable cost, and name of that one variable cost is direct material. Repeat. In a very short period of time, even we treat labor, even your direct labor, we treat it like a fixed cost. Why? Most of the time, labor, they are salaried employees. Even they're not salaried. You people, I think, should have studied one concept, the concept of minimum guaranteed wages. Yes or no? So basically, in a very short period of time, there's only one, I would say, variable cost is there, which is the cost of material. So traditionally, what do we do? If there is a limiting factor, so traditionally, what do? We calculate contribution. Then we divide contribution by the limiting factor to get the contribution per limiting factor per unit, whatever you say. Then number one, we produce the product which has the highest contribution per limiting factor. But over here, we'll be working on throughput. Throughput is simply the difference of, let's say, your sales minus the material cost. You will have throughput. Now, instead of saying limiting factor over here, we use the terminology bottleneck resources. So I have to take a break. Then we'll be starting from here, inshallah. So I'll stay online. I'll mention inshallah because now is going to be prayer time. So see you inshallah within 30 minutes. Let me pause the recording. Okay. So what do? Actually, throughput accounting says in a very short period of time, there's only one variable cost. The name is material cost. So sales minus material cost, you will have throughput. Whatever the throughput comes, okay, you will be dividing that throughput by the bottleneck resources. Bottleneck resources means simply the limiting factor. So basically, if in a very short term, according to this, I would say technique, we are considering only one variable cost, which is material cost. So you'll be calculating throughput divided by bottleneck resources. You'll be getting a technical term is return per factory hour. So basically, if there are more than one products, so we have to do the ranking, but this time the ranking will be simply on the basis of return per factory hour. Let's see all the formulae quickly, then we'll be doing the questions, inshallah. How do we calculate throughput? We know that. How do we calculate? Let's say selling price minus the material cost gives you throughput. Throughput per factory hour, another name is return per factory hour. How do we calculate throughput per unit divided by products time on bottleneck resources means simply the limiting factor. Second, cost per factory hour. You have to have the total factory cost. Total factory cost will be having only the production cost, but this total factory cost will not be having any material cost. It will be having labor cost, other production related cost, only production related, okay? Total bottleneck resources, time available. Throughput accounting ratio. How do we calculate throughput accounting ratio? That is very important. Return per factory hour, which you will be calculating by using first formula, divided by cost per factory hour. We divide this with the cost per factory hour. Let me just take the T and then we are just 1 minute, please. Here, resume recording. Okay. And just one thing regarding tea, it's not the normal tea, it's a green tea, okay? Don't have the tea with the milk, it's not good for health. And you people are the future of this country and respective countries from wherever you are. So you people should not be having tea in the evening, okay? 1 cup in the morning is enough. So this is the green tea, just for the health purposes, I'm telling. Sometimes what happens, the student, they also start having tea, thinking the teacher is having, why not we? So it is a green tea. Green tea, you can have it. Okay. So that was public service message. I had to give it. Okay. Throughput accounting ratio. How do we calculate throughput accounting ratio? That is return per factory hour, which we will be calculating by using formula number 1, divided by cost per factory hour, formula number 2. This note is very important. I think I did mention that total factory cost is having the impact of labor cost plus all production related cost. Total factory cost is the fixed production cost, including labor. The total factory cost may be referred to as operating expenses. These are production factory costs only. In the exam, watch if questions include costs not related to production. For example, marketing, which wouldn't be included in the ratio. So we have to take only total factory cost. Now listen, let's say if you have 3 or 4 products, but all are in the same division. Repeat, we have 2 to 3 products and they all are in the same division. We are making them, let's say we are manufacturing them, all the products we are being manufactured in the same factory. In that case, if you are facing this bottleneck issue, then you can simply make the production mix, decide the ranking, which product is more beneficial for you just on the basis of return per factory hour. The product which is having the highest return per factory hour, that is going to be number 1 and 2, 3, and so on. What the concept is, when we are having a single factory in which we are making more than 1 products, then you should be doing simply a ranking on the basis of return per factory hour. But there is a possibility that instead of 1 factory, let's say we are having more, we are a really big company, we are having more than 1 factories. In that case, overall we are having bottleneck resources. Now we have to make the ranking. Now, instead of return per factory hour, you should be doing the ranking on the basis of throughput accounting ratio. Return per factory hour divided by cost per factory hour. So I hope the concept is clear. Normally, where we'll be using throughput accounting ratio. Look at this. Interpretation. Extremely important. If your throughput accounting ratio is more than 1, how do we calculate throughput accounting ratio? Return per factory hour divided by cost per factory hour. If the answer is more than 1, it means your product is generating enough throughput. The return is more than the operating cost. Your product is easily covering the product operating costs and your product is profitable. Throughput accounting ratio is more than 1 would suggest that throughput exceeds operating costs. So product should make a profit. Priority should be given to the products generating the best ratios. If TPR, throughput accounting ratio, is less than 1, logically your product is not going to recover its operating costs. It's a loss-making product. Throughput accounting ratio less than 1 would suggest that throughput is insufficient to cover operating costs, resulting in a loss. So I have a question. Question is, what if the throughput accounting ratio is less than 1? We know that if the throughput accounting ratio is less than 1, the product is a loss-making product. Should we still continue that product or should we close that product? Please reply. Should we still continue that product or should we close that product? I'm talking about a product which is having a throughput accounting ratio less than 1. Should I still continue with that product or should I close it? So which option should we choose and why? Let's see what is the answer. So right now it is hot. Okay. One student says stop it. Okay. What about other students, please? I hope the question is clear to everyone. Throughput accounting ratio is less than 1, which means the product is a loss-making product. So I have a question. Should I still continue with that product or should I close it? No, this reduce the cost. Right now, we are not discussing should we reduce the cost. We are saying it is a loss-making product because throughput accounting ratio is less than 1. Should we close it or continue? Okay, the majority is saying we should close that product. Now listen, I would say still continue that product. Now the question is, why should we still continue that product? There's a reason. Listen, even though the throughput accounting ratio is less than 1, actually the throughput accounting ratio is still less than 1, but it's still throughput itself is positive. Throughput itself, it is positive. So just on the basis that throughput accounting ratio is less than 1, we are not going to close that product. So repeat. Even the throughput accounting ratio is less than 1, still I'll continue that product. The reason is because throughput is positive. If I discuss the traditional costing, what if a product is having a positive contribution, but when we are calculating profit, it is a loss-making product? I'm not going to close it. Why? Because contribution is positive. This is the fixed cost which is making this product loss-making. See, we cannot say that throughput will always be positive. What if the product becomes loss-making? Let's say you are unable to sell the product until unless you reduce the selling price a lot. Obviously, if you come across a scenario where selling price is less than your material cost, at that point, obviously, you will close that product. So we cannot make this generic statement that it will always be positive. We cannot say this. Let's go ahead. You can say normally it will be positive. Decision making in a throughput accounting environment, that is important. Okay, please try to understand. When ranking products made within the same production line, I gave you the example when there's a one factory, it is sufficient to look at their respective return per hour figures. You're dealing only in a one factory throughput return per hour. Per factory hour is good enough to go for the ranking. Respective return per hour. However, if the ranking products or divisions across the company, it would be suitable to look at throughput accounting ratio figures to reflect differences in cost between factories, because each factory will not be having the same cost. These both concepts are extremely important, not I would say numerically, but theoretically they are important if it comes in multiple choice. When you will be ranking just on the basis of return per factory hour and when we will be going towards throughput accounting ratio. Now look at this criticism. It concentrates on short term. When business has a fixed supply resources, a bottleneck, and operating expenses are largely fixed. However, most businesses can't produce products based on the short term only. You will not be producing the product only on the short term basis. It is more difficult to apply throughput accounting concept to the longer term because nothing is fixed for the longer term. In the longer term, everything is variable. When all costs are long term, every cost is variable and vary with the volume of production and sales, another cost driver. The business should consider this long-term view before rejecting the product with a throughput accounting ratio less than. Do not reject the product outright. Because right now you are having throughput accounting ratio less than 1 because of only taking one cost as variable, which is material. Rest of the cost is fixed, but which will not remain fixed in the longer period of time. In long term, ABC approaches might be more appropriate for measuring and controlling performance. Okay, can you please try this quickly? Within 1 or 2 minutes, you should be getting the answer. X Limited manufactures a product that requires 1.5 hours of machining. Machine time is a bottleneck resource. Machine time is a bottleneck resource they have identified for us. Due to the limited number of machines available, there are 10 machines available. How many? 10. There are 10 machines available. And each machine can use up to 40 hours per week. If we have 10 machines, okay, each machine can work 40 hours. It means, can I say in 1 week, we are having 400 machine hours. Yes or no? The product is sold 85 per unit and direct material cost per unit is 42.5. Total factory cost is $8,000 each week. Return per factory hour. So selling price is 85. Direct material cost is 42.5. Throughput. We are having 42.5. Bottleneck. We'll divide the throughput by bottleneck. Bottleneck resources, that is 1.5. Return per factory hour. Is this clear to everyone? 28.33, yes or no? Please, you can write in the chat box. Okay. Now they're asking throughput accounting ratio. You have calculated return per factory hour. Now we need cost per factory hour. Look at this. Total factory cost. We need cost per so we have a total factory cost is 8,000 each week. And how many hours do we have? 400. Simply 20. So your throughput accounting ratio. Return per factory hour divided by cost per factory hour. I'm getting 1.41665. Whatever. I hope it is clear to everyone. Yes or no? There's an example with the answer as well. Same thing. Improving throughput accounting ratio. How can we improve throughput accounting ratio? Options to increase the throughput accounting ratio include the following. Increase sales price for each unit sold to increase the throughput per unit. So you can increase the throughput by increasing the selling price if it is possible for you. Reduce material cost per unit by changing materials or switching supplier to increase the throughput per unit. So you can improve this throughput accounting ratio by increasing the selling price by reducing the material cost. Reduce total operating expenses to reduce the cost per factory hour. Okay. Improve the productivity of the bottleneck. Please, if you come here. X Limited manufactures a product that requires 1.5 hours of machine time in a bottleneck resources. How much time it takes? 1.5 hours. What we did? We calculated throughput. We divided the throughput with a bottleneck, which is 1.5. Now listen, if you can make your processes more speedy, automatically throughput will increase, throughput accounting ratio will increase. For example, instead of let's say taking 1.5 hour, let's say if they can increase the productivity and they can take only, if they take only, let's say 0.7 hours, 0.75 hours, it becomes twice what it was generating earlier. Now your return per factory hour is going to be 56.67. So if you can increase the productivity simply if you do the same work which we were doing earlier, but at a reduced time, take less bottleneck resources, automatically your throughput accounting ratio will be improved. So improve the productivity of the bottleneck, for example, assembly workforce or bottleneck machines, thus reducing the time required to make each unit of product. Throughput per factory would increase, and therefore, I think I did give you the explanation of the same thing. Now let's try this question, and let me share this question. Have I shared this question on the WhatsApp group? Please quickly reply. Yes, no. Okay, leave it. Just read. We'll be doing it. Then I'll share the another handout. Try to read the question as much as you can. Okay. What are they saying? What should be done? What is the optimal ranking of the products if management wanted to maximize throughput per bottleneck hour? What is the optimal ranking of products if management wanted to maximize throughput per bottleneck hour? I have a question. Examiner is asking us to give us the ranking on the basis of throughput per bottleneck, simply on the basis of return per factory hour. If examiner is asking us to decide the ranking on the basis of return per factory hour, so logically they will be having a single factory. Yes or no? In the same, let's say manufacturing facility, they will be producing more than one products. Yes or no? Because if we talk about overall company where more than one factories are available, then instead of return per factory hour, we make the ranking on the ranking on the basis of throughput accounting ratio. Is this clear? We'll be reading the question as well. Don't worry at all, inshallah. Now they're asking what is the throughput accounting ratio of product B. Okay, let's read. Yem company is involved in the processing of sheet metal into products A, B, C using three processes: pressing, stretching, and rolling. Like many businesses, Yem faces tough price competition in what is a mature world market. Okay, if in the same question, examiner asks you a question that how give advice of, they will not be asking this question just for the sake of understanding. If I ask you a question, how EM can increase throughput accounting ratio, can I say by reading this tough EM is facing tough price competition, we will never be writing that increase in the selling price. Can EM increase the selling price? Can EM company increase the selling price? Student, you can reply. They cannot increase the selling price. Why? So business is already facing tough price competition. Yes. All three processes take place. Look at this, please. Read what they're saying. All three processes take place. Look. Did you get this point? We just discussed, I think, 2 to 3 minutes back. When there's a same factory, the ranking on the basis of return per factory hour is enough. So I hope what we discuss, examiner is putting that into his question as well. And you should give credit to the quality of the question also, that while making this question, examiner had a very clear idea what he's writing. Why he's saying student, why he's asking the student calculate, make the ranking on the basis of return per factory hour. So I hope this is clear to everyone now. Raw materials for the sheet metal is first pressed, then stretched, and finally rolled. Okay. The processing capacity varies for each process, and the factory manager has provided the following data. Processing time per meter in hours. So here, the unit measure is meter. Processing time per meter in hours. We have available hours. Okay, pressing. Look at this product A. Pressing takes 0.5 hours to process 1 meter. In product A, stretching takes 0.25 and rolling takes 0.4 hours. Now listen and listen carefully. The process which takes the highest amount of time per meter, per unit, that is your bottleneck. Repeat. The process which takes highest time. Let's see in product A, which takes the highest time, pressing. Product B, pressing takes 0.5, stretching takes 0.4, rolling takes 0.25. Again, pressing is creating the trouble. Product C, pressing 0.4, stretching 0.25, rolling 0.25. So again in product C, pressing takes the highest time. And look at this availability also. Look at this available hours. One, pressing is taking the highest time per meter. Second, the available number of hours for the pressing. They are the lowest as compared to stretching and rolling. So definitely now it is 100% confirmed. The bottleneck time is the time of pressing. Yes or no? The total available hours are less than others. Per unit pressing is taking more time. Obviously, if examiner would have given us 500 hours over here, then we would have checked stretching or ruling, which one is a limiting factor or bottleneck for us. Now what is happening? Per unit pressing is taking the more time, which makes pressing, which is a really big hint towards bottleneck. And the second is available time is less as compared to other, let's say, processes. Okay. Data has been used, has been gathered for the management accounting system as follows. So the bottleneck we have decided it is pressing. Why it is necessary to decide the bottleneck? Basically, when we'll be having the throughput, then we'll be dividing the throughput by bottleneck resources. So we had to, first we have to find out the bottleneck, which process is bottleneck. Data has also been gathered from the management accounting system as follows. Selling price per meter, raw material cost per meter, and that's a maximum demand. So can I say product A, B, and C? The selling price is 70, 60, and 27. Direct material cost 3, 2.5, 1.8. Throughput 67, I believe 57.5, 25.2. The last one. Yes or no, students? Bottleneck we have decided pressing. Bottleneck. Okay. Bottleneck resources. The time of pressing is 0.5. This is also 0.5 and this is 0. We'll have return per factory hour. 67 divided by 0.5, I'm getting 134. 52.7 divided by 0.5. I'm getting just 52.7. No, this is 52.5 or 57.5. Okay, just so 60 minus 2.5 is 57.5 divided by 0.5. 115. 25.2 divided by 0.4, that is 63. Ranking 1, 2, and 3. Yes or no? Let's choose. A is. Can I say the A? Yes or no? Answer is A. Okay, now what they're asking, what is the throughput accounting ratio? We have calculated return per factory hour. Now, actually, we need cost per factory hour. For calculating cost per factory hour, first we need total factory cost. Other factory costs excluding labor and raw material are 18 million per year. And total labor cost is 2.250 million. It means total factory cost, if I ignore 3 zeros, it is 18,000 plus, can I say 2250? I'm getting 20250. Now, if I eliminate 3 zeros here, so they will come here. So that this is the total factory cost, 20.25 million. Since pressing is the bottleneck, so we'll divide this with a 2,25,000. Yes or no? Total factory cost divided by total bottleneck resources. Total which is 2,25,000. I'm getting 90. Throughput accounting ratio of product B. Throughput accounting ratio of product B. Return per factory hour is 115. I'm getting 1.2777 or let's say 1.28 with a rounding of little bit. I hope this calculation is clear to everyone. Clear. Assume throughput accounting ratio of product C is less than 1. Which of the following two statements are true? It's a loss-making product, yes or no? Product C throughput is insufficient to cover factory cost. So it is making a loss per factory hour. Can I say true? Yes or no? The first one is true. Second, management should what are they saying? Should always cease the production of product C if there is no way to increase what? Can I say false? We just discussed right now. Why would you always cease if you cannot improve throughput accounting ratio? There's a reason, because the throughput of product is actually positive. So you can't cease the product. So which option is right? The first one. Yes or no? Which of the following would improve the throughput accounting ratio of product C given the current bottleneck? Now they are specifically talking about product C. Okay, let's see. They're just talking about product C. Okay, now product C is a loss-making product because why it is a loss-making product? Because they are saying assume that throughput accounting ratio of product C is less than 1. Okay. Now, what are the ways you can improve the throughput accounting ratio? Increase the selling price of the product C. If you can do that, obviously the ratio will increase. Yes or no? But you have to see the competition, each and everything. But right now, if you ask me if you can increase the selling price, definitely ratio will improve. Reduce the pressing process time required for product C. What it does if the processing time reduces? Quickly reply, please. What happens if the processing time reduces? What will happen if we can manage to reduce the processing time for product C? Please reply. What will happen? If you can manage to reduce the processing time, that is pressing process time. If you can manage to reduce the pressing process time for product C, what will happen? See, right now what is happening? Please. Throughput is 25.2. We are dividing this with 0.4. What if instead of 0.4, if you take 0.2, your return per factory hour will improve? Yes or no? If the return per factory hour will improve, automatically the ratio, throughput accounting ratio will improve. Yes. Also correct. Reduce the raw material. Yes, if you can do that, why not? If you can reduce the raw material cost, obviously without compromising on quality, then definitely throughput accounting ratio will improve. Reduce the total. If you can do that, if you can reduce the total factory cost, definitely. Reducing the total factory cost will improve throughput accounting ratio. So all are correct. Do we have any option? Yes. Option number D. Now, GEM has decided to purchase an additional pressing machine. Additional pressing machine. Increasing available hours on pressing process per year to 450,000 hours. I have a question and we'll be going through. Okay. what is this theory of constraint? And what is the link of theory of constraint with this? Question number 5. Can anyone tell me what is theory of constraint and what is the link of that TOC with this point number 5? Actually, in TOC, theory of constraint, what happens? We decide which factor is the bottleneck. Okay, you have decided. Then what do? Then we try to utilize that bottleneck resources in such a way to get the maximum benefit. Okay, then we work on another factor. That factor is, now we try to eliminate that bottleneck resource. As soon as you manage to reduce, as soon as you manage to eliminate that bottleneck, then again we go to process number 1, step number 1, and again we start identifying that now which process is bottleneck for us. Repeat. TOC, theory of constraint, identify the bottleneck. Utilize the bottleneck in the best possible manner, then eliminate that bottleneck. Once you have eliminated, then whatever initially you decided the bottleneck, now you have eliminated, then go back to the step 1 again. Now you will be having a different bottleneck. This is what TOC says. Look at this. What are they saying? What is the new bottleneck? Initially, the bottleneck was pressing. By introducing an additional pressing machine, now pressing is no more bottleneck. So now we have to find out now which process is bottleneck. Let's go back. Please. Pressing is no more bottleneck because pressing is having now how many hours? 4,50,000. Stretching takes 0.25 hours in product A. The demand for the product A is 300,000. Stretching takes 0.4 hours in product B per meter, which is per unit. And there's a demand, maximum demand of product B is 2,50,000. Stretching takes 0.25 hours in product C and the demand is 4 lakh. Total time available with the stretching is 2,75,000. So let us calculate. Then how many hours do we need for stretching to meet all the maximum demands? So if I take 300,000 into 0.25 plus 2,50,000 into 0.4 plus 400,000 into 0.25. Let me use a calculator. What is the time? 300,000 into 0.25 plus 2,50,000 into 0.4 plus 400,000 into 0.25. I'm getting 2,75,000. And stretching is having 2,75,000. So can I say stretching is not the bottleneck? So definitely the new bottleneck is ruling. Let us calculate also. The maximum demand for product A is, the maximum demand for product A is 300,000. B, the maximum demand is 2,50,000. C, the maximum demand is 400,000. Now rolling takes how much time per meter per product? Rolling takes 0.4 hours in product A, 0.4 hours in product A. 0.25, 0.25 in rest of both the products. So 300,000 to 0.4 plus 2,50,000 to 0.25 plus 400,000 to It is coming 2,82,500. To meet this maximum demand, we need to have 2,82,500 hours of rolling. Rolling. And how many we are having? 275. So the new bottleneck is rolling. I hope this is clear to everyone. Yes or no? Let me save this page and share another handout with you. Okay, let's go towards relevant costing, decision making. Relevant cost, I'll be a bit quick, obviously. Relevant cost of material. Let me give you the first basic understanding of relevant cost. Listen and listen carefully. Relevant cost means the cost which is affected by your decision. Relevant cost means cost which is affected by your decision. It could be inflow, it could be outflow. But the effect is coming because of your decision. Then it is relevant. Otherwise, it is irrelevant. Now, we have specific cases of relevant costing. First, quickly we are discussing relevant cost cases relating to material. One possibility that you do not have the material which you want to use in a contract, you don't have it. Can I say the material which I want to use in a contract, if I don't have it, I have to buy. So when you're going to buy, the current purchase price is relevant. Relevant cost is the current purchase price. The material which we don't have it. So obviously to fulfill the contract, if we want to go towards that contract, we have to buy that material. So the current purchase price is relevant. Now let's talk about a material which is in stock. The material is available. The material is available, but if the material which is available in stock is in your regular use, still you will be having a relevant cost. Still your relevant cost will be the current purchase price. Why? Even though it is in your stock, it is available, but it is in regular use. If you are taking the material from your stock, then obviously for your own use, you have to buy from outside. So in any case, you will be buying the material from outside. In regular use and will be replaced, relevant cost is the current purchase price. Second possibility, that you have the material in your stock, but which is not in regular use. Let's say will not be replaced. You have a material, but will not be replaced. Now what should be done? Relevant cost is the opportunity cost. I cannot replace. I have a material, but I cannot replace. So, okay, if it has no use, you can sell it. So the scrap value is the opportunity cost, which is relevant if you can use that material in a contract. Relevant cost is the opportunity cost. For example, lost scrap value or lost contribution if you use the material here instead of elsewhere. So if you have a material in your stock which cannot be replaced, then your relevant cost is the opportunity cost, which could be either scrap value or the lost contribution. Okay. Is there any alternative use of the material? If no, the relevant cost is the scrap value. Of course, if it does not have any alternative use, then you will have to scrap it. Yes, yes, alternative use is available. If alternative use is available, then relevant cost is higher off. Relevant cost is equal to higher of value in other use or scrap value. If the material is having an alternative use, then relevant cost is higher of the value of other use and the scrap value. I have a question. You people just tell me what is the relevant cost. Now listen. For example, somehow, assuming you have convinced your director to buy material, to buy chemical wire. The director was not willing to buy, but you convinced him a lot and they said, okay, let's buy. Since you have convinced and they listened to you and they bought the chemical for $10,000. Okay, to produce the product XYZ, but to manufacture that product, they need to take the approval from the government. Let's say government has not given the approval. Okay, but the chemical is still there. After 3 to 4 months, the chemical turns into poison. Now, company will have to landfill that chemical. On land filling that chemical, company will have to bear the cost, which is $500 to properly landfill that, to properly dispose of that chemical properly, so that environment should not affect the environment. Company will have to incur $500. Now, in between, your company is receiving a contract. Let's say your company has received the contract where this chemical can be used. I have a question. If this chemical can be used, what is your relevant cost? What is your relevant cost? Please reply. What should be your relevant cost relating to this chemical? Please reply. You can use the chat box option. What is your relevant cost? Okay, here comes the answer. It's a relevant benefit. It's not a cost. In fact, logically, there will be an inflow of 500. So there's a relevant benefit. There's no cost. Because if you're not opting that contract, you have to bear $500 cost. Accepting that contract means saving that 500. So excellent answer. This 500 is your relevant benefit. Any historic cost given for material is always a sunk cost, past cost, never relevant, unless it happens to be same as in the current purchase price. The current purchase price is relevant if we have seen material is in regular use and things like that. Sunk cost is always irrelevant. The cost which you have incurred in the past, it cannot be reverted back, whatever you do. So students, every one of you believe that past cost is a sunk cost, should not be taken while making the relevant costing decision. Yes or no? Please quickly reply. Every one of you, please tell me. Strongly believe that in decision making, historical costs and costs should not be taken because it is irrelevant. Am I right? Yes or no? Please quickly reply. Not relevant. Yes, not relevant. Not relevant. It is perfectly right answer. But let me tell you one thing. You all believe, and you believe with your bottom of your heart, I would say, that past costs and costs is relevant. But let me tell you one thing. Majority of the students, when they make decision regarding themselves, where they can improve their skills, I would say, they take past cost as a relevant cost. That is why their decision is always wrong. Example, as a teacher, when we advise our students that please do learn this skill also, do this also, majority of the students, they say that, sir, we have already incurred so much cost on our study. You want us to incur more cost? You want us to spend more? The moment when the student says, I have incurred already so much cost, can I say this student is taking that past cost and cost as relevant? Yes or no? Yes or no? Tell me. Majority of the students, they say the same thing, that we have already spent a lot on our studies. So the moment when you say The moment when you say that we have spent a lot already on a study, it means now you'll be saving the money and that is going to create a problem. Always invest on yourself. Investing on yourself does not mean buying really good clothes. I'm not saying this. Always try to make investment. Let me tell you where to make investment. Always try to make investment above the neck area. That is your head. Always try to make investment above the neck. You will be more benefit. You will get more benefit. Okay, let's come here. Otherwise, we'll go somewhere else. The above diagram assumes that it is possible to buy more materials if required. They may not always be the case. Material can be in short supply. Look at this. If material is in short supply, then only way a proposal can be undertaken would be by denying another part of the organization that resource. In this case, the relevant cost is the normal material cost plus what lost contribution in the other department. If the material is in short supply, and there's only one way to use that material to a new contract, that we have to stop our existing work. Can I say if I have to stop my existing work to fulfill the new contract, the relevant cost of the material will be whatever we paid for the material cost plus the contribution loss. But it only happens when material is in short supply and you have to stop your existing work in order to opt the new contract. Now quickly discuss the relevant cost of labor. If your labor is having a spare capacity, idle capacity, relevant cost is nil. Labor is having an idle capacity. Obviously, when someone is having an idle capacity and you ask your labor to do spend few hours on new contract, so logically there is no labor cost. Why? Because in any ways you have to make the payment. So simply, when your labor is having an idle capacity, the relevant cost is zero. Full capacity. Can hire more labor, that is taken to extra staff or pay overtime. Relevant cost is the extra cost of labor. Can hire more labor. So simply, if you can hire more labor, that is take on extra staff or pay overtime. So whatever, either you are hiring a staff from outside, whatever you are paying, it is relevant. Or second, you are asking your existing staff to work overtime. Whatever you are paying in overtime, obviously, when someone is working overtime for us, we normally pay more than the normal rate. So whatever you are paying on extra hours, that is a relevant cost. Okay, but this is what happens when you can hire someone or you can ask your existing labor to work overtime. Cannot hire more labor. Can I say if you cannot hire more labor, then what do you have to do? Can I say then you have to stop your existing work and to ask your labor to move from work A to work B? Then relevant cost will be whatever you are paying to the labor plus contribution loss. You can see that. Cannot hire more labor. Relevant cost is opportunity cost of the delivering labor, that is loss contribution and extra labor cost. So simply whatever you are paying to the labor plus loss contribution. Now relevant cost associated with non-current assets. Let's say non-current assets. Based on comments above, we can summarize the relevant cost associated with non-current asset. Non-current asset, new. If it is a new asset, you are buying a new asset. Relevant cost is the purchase price, scrap value. Two things, two cash flows are relevant when you are buying a new, I would say, non-current asset. One is the purchase price, second is the scrap value. Both are relevant cash flows. Existing asset, relevant cost is the opportunity cost. Hire of. Sale proceeds. Loss contribution from use in other department. If you have an existing non-current asset, then your relevant cost is the opportunity cost, which is higher off. Sale proceed of this asset, if you can sell it, or loss contribution from use in other department. If you can use this asset in another department, what contribution you could have generated? Obviously, if you're using this non-current asset somewhere else, so you are losing that contribution. So your opportunity cost is higher of 1 and 2. So these are the relevant cost cases relating to material. We have seen relevant cost cases relating to material, labor, and non-current assets. Let's quickly deal with this question. As the management accountant to the company present comparative statements to show the net benefit to the company of undertaking the more advantageous of the two contracts. Which is more advantageous? Explain why you include or not each items given the data in your answer. Comparative financial statement, 20 marks. Okay, let's quickly deal with this. A company in the civil engineering industry with a headquarters located 22 miles from London undertakes contract anywhere in UK. Okay. The company has had its tender for a job in the northeast England. The company has had its tender for a job in northeast England, accepted 2,88,000, and work is due to begin in March X3. So northeast they have accepted. Northeast one they have accepted. Price they will be getting this. However, the company has also been asked to undertake a contract on the south coast of England. The price offered for this contract is higher. South coast is going to give you 3,52,000. Both of the contracts cannot be taken simultaneously because of the constraint on staff, site management personnel, and plant available. So you will have to choose any one of them. An escape clause enables the company to withdraw from the contract in the northeast, provided notice is given before the end of November and agreed penalty is $28,000. Now listen, northeast contract, company has already accepted, but there's a escape clause. If they want, they can leave this contract. But my question is, can I say if they are, let's say, thinking to leave the contract, it will be just because of another contract, which is south coast. If they're going to opt south coast, whatever benefit they will be getting from south coast, whatever benefit they will be getting from the south coast, can I say that benefit will be reduced by the amount of the penalty which they have to bear in order to opt south coast? Repeat, whatever benefit they are going to get from the south coast, can I say that benefit will be reduced due to the penalty, because they have to bear the penalty? Is this clear to everyone? Whatever benefit they will be getting from the south coast, that benefit will be reduced due to this penalty. Yes or no? You people can reply. There's no harm at all, because we have few minutes still. Is this clear to everyone? If we are going to opt south cost, so the whatever benefit we'll be getting from south cost, it will be reduced by this penalty amount. So after a long time, one student said yes, sir. Okay. The following estimates have been submitted by the company's quantity surveyor. Okay. Northeast south cost material in inventory at original cost. So we have to see the rule. relating to material X. It is an inventory, but we have to check, is it in regular use? Not. Inventory, in inventory at original cost, that is material Y. Firm orders placed at original cost, material X. What is the meaning of this firm orders? What do you mean by firm orders placed at original cost of material X? Students, please reply. Actually, when we say firm orders, the normal meaning is you have already. When we say firm orders placed at original cost material X, it means you have already placed the firm orders. Means you have already made the contract. Under that contract, you have already made an order of buying material X at a price 30,400. Now, you have to make the payment of 30,400. You have no choice at all. So whenever firm's order placed at original cost, you will always deal with such material like that material is in your stock. So all the rules which are applicable on a material which is in stock, you will be applying the same rules on that material for which you have placed a firm order. Is this clear to everyone? Firm order means you have made under a contract, you have placed an order. Now you cannot go here and there. You have to pay 30,400. In other words, logically 30,400 is no more relevant for you. Now you have to see the case. Is this material is in regular use or not? Whatever it is. I think this is good enough explanation. Not yet order. The material which you have not yet ordered. So whatever cost you are going to bear, that is a relevant cost. Yes or no? The material for which you have not placed an order yet. So whatever cost you are going to bear, that is a relevant cost. Not yet order. Okay, not yet order, current cost of material X, this is relevant, yes. Not yet order, current cost of material Z, this is relevant, yes. Locally hired labor, this is relevant. If we are going to northeast, we will hire the labor over there. If we are going towards south coast, we will hire the labor over there. What they are saying? Locally hired labor. So labor hired locally. So it is very much relevant. Is this clear? If we go towards northeast, we will be hiring the labor over there. If we go towards south coast, we'll be hiring the labor over there. So it is very much relevant. Look at this. Site management. It looks the fixed cost. Not affected either you are going towards northeast or southeast. It's the same cost, site management. Can I say logically, we'll read the question as well, but it looks straightforward that site management is your irrelevant cost. Either you are going towards northeast or south cost, you have to bear it. Staff accommodation and travel for site management. Can I say this is relevant? What is written? Just read staff accommodation and travel for site management. Obviously, if we'll go to northeast, we have to bear this traveling cost as well as accommodation cost. Plant on site depreciation, always irrelevant. Interest on capital. Interest on capital. This is just a notional cost. It's just a notional cost. They're saying interest on capital. It is not your actual cost which you are going to bear. They are not saying, please listen and listen carefully. They're not saying because of fulfilling the contract, we have to take loan. On that loan, we have to pay interest. If you say such thing, then it becomes relevant. There's no such thing. I'm just saying interest on capital. That is your notional cost, that this much interest, this much capital I'll be using to fulfill this contract. So I should be getting this much return on that capital. So such notional cost is irrelevant because they are not saying because of the contract we have to take the loan. If the scenario was like that, because of the contract we have to take the loan and on that loan we have to pay the interest, then it is relevant. But right now, just interest on capital is a notional cost, it's not your actual cost, irrelevant. Headquarters cost allocated at a rate of no. Allocation is irrelevant. If you even you are not going towards northeast or south cost, you still have to bear the headquarter overheads. Headquarter cost you have to still bear. Okay. Contract prices they have given us. We have little bit time. Let's just discuss this one. X, Y, Z are three building materials. Material X is not in common use. Would not realize much money if resold. However, it could be used on other contract, but only as a substitute for another material currently quoted at 10% less than the original cost of X. Can I say for material X, the relevant cost is whatever is written, 90% of that. The relevant cost for material X is whatever they have written, we have to just take 90% of that. Yes or no? Students, you can reply, please. What is finished? Actually, we're going, this is the point of opportunity cost. When material is not in relevant regular use, and let's say it has an alternative use, then we go for the opportunity cost, which is higher of a scrap value and value of another use. Scrap value is very nominal, which is written. So value of other use is higher. So all you need is just take. Can I say we'll take 90% of this? And even the firm order we have said, we have already decided firm orders means treat this like this stock is in your, this material is in your stock, 90% of this. Okay. The price of Y, a material in common use means regular use, has doubled since it was purchased. So can I say material Y relevant cost is just multiply this by 2, because why? Common use means regular use and the price has become double. Just multiply by 2. You will have a relevant cost. The price of Y material is in common use. The double has doubled since it was purchased. Its net realizable value if resold would be less than. Would new price is 15% less to cover disposal costs. That is irrelevant. Alternatively, it could be kept for use to other contracts of the following financial year. Simply the material which is in your common use, regular use, the relevant cost is whatever is the current purchase price, and current purchase price is double the previous price. So all you need is just multiply 24,800 by 2, you will get a relevant cost of material Y. With the construction industry not yet recovered from the recent recession, the company is confident that the manual labor, both skilled and unskilled, could be hired locally on a subcontract basis to meet the needs of each contract. So it is very much relevant. Wherever we'll go, we'll hire the labor over there. The plant which would be needed for the South Coast contract has been owned for some years at 12,800. Can I say this 12,800 is irrelevant? It's a past cost, sunk cost. Some year, and 12,800 is a depreciation on a straight line basis. Can I say depreciation is irrelevant? It's not a cash flow. The plant which you own, whatever at whatever value you have owned, it is irrelevant. Depreciation is irrelevant. If the north east contract is undertaken, northeast, less plant will be required, but the surplus plant will be hired out for a period of the contract at a rental of 6,000. Now please listen. The northeast, they are saying something. If the northeast contract is undertaken, they have already accepted the northeast. If you go back there, the company has had its tender for a job in the northeast England, accepted this. So can I say you have already said yes to the northeast? Now listen. If you stay with the northeast, you will be earning a rental income of 6,000. Yes or no? Is this clear? If you stay with the northeast, you will be earning this rental income of 6,000. But if we are going towards south coast, we will not be able to earn this 6,000 rental income. Can I say it will become an opportunity cost? Obviously, opting south cost, whatever benefit we were getting, that will be reduced by the penalty amount which we have to bear if we go towards south coast. Leaving northeast, you will be bearing a penalty as well as you'll be losing the rental income. So logically, the penalty amount as well as this opportunity cost of rental income both will be charged to south cost. And this 6,000 and penalty both will increase the cost of south cost. It is the company policy to charge all contract with notional interest at 8% estimated working capital involved in the contract. Progress payment no, irrelevant. Salaries and general cost of operating a small headquarter about this, can I say irrelevant? Each of the two contracts is expected to last from March X3 to Feb X4, which coincidentally is the company's financial year. Site management is treated as a fixed cost, irrelevant. So, dear student, I would say just one thing. If you have time, try to attend this. Otherwise, inshallah, the class which I'm going to take tomorrow, inshallah, will start from this question, inshallah. And tomorrow's timing will not be same. It's a different timing. So those students, they are here today, inshallah. They will be getting the, inshallah, recording of tomorrow as well. Don't worry at all. Thursday timings, let me write the timings. Inshallah, we will start the class at Thursday at 1:30 p.m. It will go till 3:30 p.m. So inshallah, we are having day 3 is tomorrow, inshallah, of your crash. The timings are 1:30 p.m. till 3:30 p.m. A recording definitely will be available, and on the same day, inshallah, I'll ask my IT team to upload the video lecture. I think after 7 o'clock it will be available, inshallah. Otherwise, till maximum 9, otherwise around 7 o'clock in the evening, inshallah, the lecture will be available. So simply, I just want to show one thing. Thank you very much that you people have again taken out some time to take this live revision class. Thanks a lot and have a nice life. Assalamu alaikum to everyone.